AI is booming. Humanity is heading towards general intelligence and super intelligence in the next 10 to 20 years. This is merely a house of cards if we don't put this on a reliable infrastructure.
Today's guest is Abhi Kumar. Abhi is a strategy and technology leader at the forefront of aerospace and emerging technologies. He's an invited lecturer at UC Berkeley, where he designed and teaches the new space economy course that brings together founders, investors, and operators to decode what's next in space.
All these big, lofty ambitions of creating a super intelligent human civilization, and these all sound great in science fiction novels, but if they are not supported by an equally colossal amount of effort going into creating that infrastructure, then it's a house of cards at the end of the day in that case.
In 2025, over $55 billion with a B was invested in the space economy. SpaceX alone is eyeing an over 1.75 trillion with a T potential IPO this year, with intentions to raise a record $75 billion. That's over 2x what Saudi Arabia's oil company IPO'd at a number of years ago. So it's a lot of capital. If you had to explain what's actually going on in space right now, beyond these fundraising headlines, Abhi, where would you start?
Almost every IPO goes through volatility initially, right? So I'm not suggesting that there won't be volatility, but I think the long term prospect for space to emerge as a mainstream sector, I think is greatly enhanced, is greatly improved by such a large IPO. I think it's going to catch attention of a lot of institutional investors. A lot of institutional capital will be diverted towards it, and I think in the long run, this is great for the space economy. Short-term effects, we can unpack that later. There's a lot of moving parts to that. SpaceX IPO is great news for some people, good news for others, and not so great news for some other people in the space economy as well. What's changing? A lot of things have changed in the space economy for us to bring to this moment in time. Many of them I would call them like they would fall in the technological bucket. I would say first and foremost, shouldn't come as a surprise to anybody that rocket launches have like 100x reduced in cost. That doesn't mean that they have 100x reduced in price point, which is a very different thing. For those of us who went to business schools, cost is not equal to price. Like you can always use that in your pricing power. But anyhow, history tells us whenever cost falls, pricing follows soon after. For now, SpaceX enjoys a near complete monopoly on these big heavy launches, but very soon they are going to face some competition. But anyhow, like the overall reduction in space launch pricing has greatly helped. Shouldn't come as a surprise to anybody. That barrier, that erstwhile barrier to access to getting into space is for the most part not there. For most serious players, it's not there. It's still a fair amount of money for like small university labs to put out a satellite up in space. But I suspect that even that's going to melt away very soon, like in the next five years. The other aspects in the technological bucket, the cost of hardware and the quality of hardware that is going into space has improved. When I say quality, I don't mean like we are improving upon the hardware. What I mean by that is well, that's true as well. But in addition to that, a lot of players are now willing to experiment with like non-space grade hardware, right? Like hardware has improved. So first of all, sensors have improved. The cost of making a satellite has improved. What used to cost, let's say, $40 million to make in 1980, probably well, inflation adjusted, probably cost like 5 or $10 million to make it today, right? Like there's been at least a 5x reduction in the cost of the hardware, which is going up. And in addition to that, people are more willing to experiment with the quality of hardware. Not everything needs to be rad hard, radiation hardened space hardware, which used to go up, which used to be the table stakes in the space industry 20, 30 years ago. These days, a lot of companies are toying with the idea of, hey, let's just send up hardware into space, which is not built for space, and see how long it lasts, right? At least in the low Earth orbit. Like low Earth orbit is shielded by the Van Allen radiation belts. And because of that, the radiation environment in low Earth orbit is not as bad as it is in deep space. It's still quite bad. Don't get me wrong. It's still very bad, but at least not as bad as deep space. So companies are willing and startups are willing to experiment there a little bit. And just the quality has improved. In addition to a precipitous fall in the costing regime of these hardware, just the quality has improved a lot. The same imaging sensors, like while their pricing has fallen by 5x, their quality has improved by 5x or something like that. um, Antennas are much smaller and much more reliable. Same goes for other satellite hardware. You talk about reaction wheels. Well, reaction wheels are still a bit of a pain in the industry, but even they have improved quite a lot. So what I'm saying is that there's been an across the board improvement in the quality of hardware, reduction in the cost of hardware, and also a sort of like a cultural acceptance within the industry to try out with non-space grade hardware and see how it goes. So that's like another um, aspect that I would put in the technological bucket as to what is changing in the space economy and why we are seeing such a, like, why is everybody talking about space economy for the last 10 years, especially in the last few years. There's also been a proliferation of like software defined systems. So for example, I'll give you an example. We used to have radios in space industry, right? And we still have them around. But now you can, and these are like what you put on a satellite to talk on different wavelengths, different frequencies, right? Now you have software defined radios, which are obviously, software doesn't get worse with time, hardware does get worse with time, right? And so that's a big win. Software is scalable, right? Like once these SDRs are developed, like they can be deployed at zero marginal cost or nearly zero marginal cost. uh, so there's been a lot of software revolution in space. It's still pretty much a hardware game, I would say. It's still, if you want to do anything big and worthwhile in space, 9 out of 10 people would still think about hardware. But software is slowly making inroads into the space economy, and my prediction is that in the next 10 to 20 years, we can see it will be completely reasonable to see a lot of software only space startups. So we are already starting to see some like cybersecurity, space cybersecurity, and a bunch of like mission management software, space software companies emerging. My prediction is that that number is going to go up in the next 5-10 years.
There's so many exciting insights that you just shared in that overview, Abby. It sounds like accessibility in space in general has increased multiple folds over the last, call it a decade. Cost is coming down, likely followed soon by pricing. Quality of the hardware and of the software is increasing. And because of that, we can also start testing new materials that might even further, accelerate that flywheel. So it's so exciting to see these things driving excitement around SpaceX and some of the other startups in the ecosystem.
Also, because the cost of launch has gone down. It could be you are just spending like maybe $1 million on the launch, depending on how big your hardware is. So companies are willing to experiment a little bit. So it's like a third factor, but that third factor in some way is affected by the first factor itself.
You mentioned that there's a couple of different trends that are increasing focus and investment in the space economy today. Low cost of rocket launch was one of those key unlocks, but there were a couple other that you mentioned. Would you mind walking us through those today as well?
Yeah, geopolitics has been I would say, has been the defining macro trend for the space economy in the last 4 to 8 years. Lately, the trend that we have seen is the trend of sovereignty. Almost every nation which has some space ambitions wants to incorporate sovereignty into those long term plans, meaning that they don't want to just buy space capabilities from spacefaring nations. They want to develop their own capability to some extent, whatever they can do, depending on how big and capable their own space program is. Uh, EU, for example, recently declined a lot of launch capability offers from SpaceX in favor of doing homegrown in favor of homegrown launch options, which could cost as much as 5x SpaceX. So it is short-term pain for long-term for what they see as reducing long-term strategic vulnerability. Interest rate environments always impact at least the U.S. startups, and in due time, if they sustain for a long time, it affects other startups in other countries as well. If you look at the FRED data from the federal website, you will see that there have been what I call investment Christmas periods every now and then when the rates were nearly zero. Institutional investors didn't have any other place to deploy their institutional capital. Bonds were offering close to 0% interest rate. Where does the money end up? It ends up in the funds with these different VC firms. And when VC firms get a lot of capital commitment, sometimes these are hard capital commitments, sometimes these are soft capital commitments, right? So in some cases, even when it's hard capital commitment, you do want to deploy them at some point, right? But when there's a soft capital commitment, there is a fear of use it or lose it, right? The LPs can call back their money, right, if they don't deploy it. So what that meant was that for the longest time, a lot of space startups, even though they went under scrutiny from different VCs, the scrutiny wasn't, let's say, the most stringent, right? Like a lot of ideas got funded in those periods. Right now, we are not living in one such period. Right now, the barrier and the threshold to meet, and the barrier to cross and the threshold to meet in order to get VC money in space economy, I would say has been the highest that it has been in the last 5 to 10 years, which is in some ways good for the space economy as a whole, right? Because now, instead of 9 out of 10 VC funded companies failing, it will probably be 4 out of 10 VC funded companies failing, which in turn will boost the confidence of institutional capital towards space economy, which is what is needed at this point. For the longest time, space industry had this reputation of space is hard. It's doing science experimentation on somebody else's dime, and it's time the industry change that reputation. And I think the fact that we find ourselves in a high rate environment pushes us towards that future.
So, Abby, you work with venture backed founders and you also work with a lot of aspiring entrepreneurs in your UC Berkeley class on the new space economy. Tell us from these conversations, what makes the difference between a venture backable business and one that should consider other funding routes?
Yeah, I mean, this goes back to the very heart of the debate between whether your business is some sort of a lifestyle grade or lifestyle business, or whether it's a venture backable business, right? This is a question. This is a discussion that I have in my classroom environment very frequently. This is how I explain to them without actually using any terminology, TAM, SAM. Even before I introduce those concepts to my students, I ask them one thing: do you think there is a possibility, a reasonable likelihood that the business that you're proposing, the business idea that you're proposing, could grow in size by a factor of 100 or 1,000 if the right conditions persist? Or if there's like all the things that you hope would be true in the next 5 years, if they do turn true, can your business grow 100x or 1,000x? If the answer to that is honestly yes, then I think your business is venture backable. Venture investing, by its very nature, operates on the power law function, right? Uh, VC investors, venture capital investors, they're not looking for 1.5x growth or 2x growth, because they know that 8 out of 10 companies they're investing in will probably end up crash and burn in 5 to 10 years. So they are sprinkling their capital across a lot of companies, and they are hoping that 2 out of those 10 companies will grow 100x or 1,000x, and it will make up for all the other 7 or 8 failures, right? And so unless your startup idea can reasonably convince a VC investor that yes, there is a path to 100xing or 1000xing this business in the next X years. Like that X is depends on the investor as well. Like some of them have bring in patient capital, they are willing to wait for 10 years, 15 years. Some of them are not so patient capital, and they want you to grow. They want you to have a path to growing to 100x in like 5 years, which is typically not possible in space industry. So those are usually software type investors. So that's the question I ask people first, and before getting into the quantification of the problem, right? And when the answer is yes, then we get into the details of like, all right, now let's see what the TAM is, the total addressable market, TAM, SAM. And so TAM should be large enough to get the VC excited, but at the same time, the immediate beachhead market that you're hitting the SOM, it should also be large enough for the initial amount of activity to be justified with investments from VC. So that those would be some of the ways in which I convince my audience to sort of like make a conscious choice, right? Because there's no problem with creating some sort of a boutique consultancy or a boutique service space company. Let's say you have been a systems engineer in space industry for 10, 15 years, and now you want to do something of your own. There's no problem in just creating your own company which offers systems engineering services, but no, make a conscious choice, make a conscious decision, knowing that this is not a scalable business. For every new contract that you have to sign, you have to bring in another headcount, which may or may not be as good as you are, right? So this business scales sublinearly. So for every unit of capital expenditure, the revenues may not scale even linearly. The revenues may scale sublinearly. So while this business can grow, it may not scale as well. Whereas some startup ideas, by their definition of the technology that they are trying to develop, that would create the solution to a problem that is rampant across the industry. So once you solve the problem for one customer, you have essentially solved the problem for potentially hundreds of others. So by that initial capital, your returns are actually, if you look at the shape of the returns, with each unit of investment, the returns are actually going upwards, like going above the 45-degree line, not below the 45-degree line. So that is the clear distinction between scaling and growing. I say if your company is capable, if you honestly think that it can only grow, not scale, then it likely is a lifestyle business. But if you think it can really rapidly scale, or even if not rapidly, but at some point in future it can scale to 100x or 1000x, then yes, there's a scope for getting VCs excited and naturally and getting to back your company.
This delineation that you explain between growth and scale, I think, is really resonant of a lifestyle business, which, by the way, can be very lucrative versus a venture backable business. And I think it's a great highlight of, don't be distracted just by the shiny fundraise numbers that are happening in the industry. Really think about your life and your business's life beyond the raise and what makes the most sense for the goals and for the market that you're playing in.
Absolutely. Like even if you're like you have to look at the flow of money both ways. Like sometimes people ask, do I qualify to be a venture grade business? But at the same time, they should also be asking themselves, is venture the right kind of capital that I need? Or should I try and bootstrap it? Or should I try and get some sort of a bridge loan or get some sort of like a small business loan if it's like a cash flow operation? Then those might be better avenues to get the money that you need to get your business growing, because VC money comes with its own strings attached. It's not. I'm sure it's great for some companies, but it's not you know always as glamorous as people tend to think of it. Right? It comes with a lot of responsibilities that you may or may not be okay with, especially if you're aiming for just a lifestyle business that you think should fit snugly with your lifestyle.
With venture capital financing, I think entrepreneurs don't always fully appreciate what that comes with: board meetings, updates, a focus on growth. And if you're not in that top 10% of a VC's portfolio in terms of performance, a lot of the perks and the support, is not as comprehensive. And so, I think really understanding the life that you want to lead, what your Thursdays and Sundays look like, what flexibility means to you, what intensity means to you. I think these are all really important introspective questions to ask yourself as you're thinking about what kind of financing to bring to your company. So these are excellent call outs. I would love to shift gears a little bit into how we build businesses within space, and help demystify any sense of science fiction behind the business model itself versus just the technology. So maybe we start with the concept of grants. So earlier in the conversation, you mentioned that grant funding is still a really big part of business building in the space economy. Let's start there. Maybe talk to me a little bit about the importance of grants in building the space economy.
Yeah, I mean, United States government, like almost any government on this earth, would like to see certain critical industries advance forward because they form the backbone of the portfolio of national capabilities, right? Space is one of them. I'm sure there are other industries. Biotech is probably one of them. Um, Nuclear energy is seeing a resurgence, a renaissance of sorts lately. So there are a lot of industries that very easily qualify as nationally critical industries, and especially in those industries. I'm not saying it's not happening outside of those industries, but especially in these ones, the government is incentivized to sort of like push the entire industry upward, right? Because when the rising tides helps everyone in the industry, and how do they do that? They very frequently come out with these RFPs, and they want to see some sort of technology demonstration, some sort of technology development project or program that can be run either by one small. It comes in all sorts of flavors and sizes. It can be handled by maybe a small little startup, or it can be five different startups competing with each other and trying to develop some sort of a technology, or sometimes it's just a study, right? Like if it's a very initial phase, then they will give out these small little grants to, let's say, 5 to 10 different companies to do these studies. And then in some sort of a phase two of that same effort, they will select a few of those to carry forward with an actual tech demonstration. Think of it this way: if you are a startup and you are trying to develop a certain technology to win your customers, and somebody comes along and says, hey, you know what? I'm going to pay you money to do what you were going to do anyway. And in exchange for that, I need nothing from you. All I need is like some sort of an acknowledgement, and that, there are different ways to handle the IP, because at some point you have to consider the fact that the US government is paying you or the Department of Defense is paying you money to develop certain kind of technology. So IP has to be handled in a certain way. Roughly speaking, that money is essentially free. Like there are some strings attached to it. You have to have a period of performance. You have to have a certain level of maturity. You even have to have a certain kind of structure on your cap table in the sense that you can't be foreign owned more than a certain percentage. So as long as you qualify all of you jump through all of those hoops and you qualify in all those um, set of criteria, you get that money to develop a technology and it's non-dilutive, meaning in exchange for that, the US government doesn't ask for a share of the pie, a stake in your company. And so for young startup founders, this is the best possible outcome. And also there's a third element to it. If the Department of Defense or DIU or SDA or whichever agency we are talking about within that Department of Defense umbrella, if they trust you, if they think that you are qualified enough or mature enough or promising enough to do this, then that should act as a signal to your other investors, right? Investors who up until then, who otherwise would not have been as interested in you as they are now, because now you just received a grant, which means you are capable enough or promising enough, and you are well on your way to develop that technology. So there are like two unblockers in one shot.
So let's zoom out a little bit more then. For founders that are thinking about building in space, how different is it to build a space business than perhaps, a robotics company? What are the unique challenges that space founders may face?
A lot of industries are under this deep tech umbrella, which is there's no formal definition to it, but we can easily think of industries like autonomy, robotics, uh, maybe to some extent. Some people include healthcare. Some people don't include healthcare in deep tech. Nuclear energy, newer forms of energy. There's a lot of it's a big camp. Climate science also sometimes comes under it. I would argue that space is perhaps the most capital intensive industry within the deep tech umbrella, under the deep tech umbrella. The only one that probably comes close to space is, I would say, nuclear energy startups, because they have to also solve a lot of fundamental technological problems. Maybe not science problems at this point. Well, who am I to say that? There are some startups who are even claiming to be solving really really fundamental problems. But I think, long story short, I think space is very very capital intensive. The When you do the risk matrixing of the space industry, what is the likelihood that you'll run into some sort of failure, and what are the consequences of that failure? Space industry is in the top right corner of that matrix, whereas the likelihood of a failure is also very high, and the consequences of the failure is also very high. So it's a very unforgiving domain to be within. Unfortunately, the industry has failed to attract a lot of non-space people. It's still to a large extent dominant, at least in the founder community. It's still very much dominated by people who have excelled, technically speaking, in aerospace or space, who have PhDs for. But that's not to say there's no space for like non-technical people in the industry, but it is clearly dominated by like very technically minded folks. Um, it's very regulation heavy, and that's where one thing where I would say that there are some other industries within the deep tech umbrella which are probably more regulated. I would say nuclear energy is probably more regulated than space. Healthcare is probably the most regulated of them all, but space is also right there in the maybe the top three or top five. So you have to deal with a lot of regulations. It's a process heavy industry. Unless you understand the process, unless you can play that process, unless you can be patient with that process, it would be very hard for you to survive. And that's where some of the non-technical people can actually come in, because responding to having these government relations, responding to government, just communicating with the government itself is an art. Like you need to know how to do it. You need to know how exactly to respond to it. There are a lot of steps and procedures to follow. So I would say, yeah, in those ways, building a space company is probably very different from. And one other thing I would say is that how like three guys in a garage can build a software startup, and in 18 months they hit like a like if the luck is on your side, in 18 months you hit like a 10 million ARR. That's not the kind of story that you hear in space industry. In 18 months you barely get your first grant, if that at all. So it's a slow moving industry. Things take time to get built, and even longer to get qualified and certified and get operational. And even then, the amount of revenue that you get from your customers is often pretty lumpy. So it's not that you can recognize revenue every quarter. So it's a very different ball game. It's a very different industry. I would say to a large extent, if you're trying to be a founder in space, you need to understand space industry for at least a few years before you can jump. And like there's no such thing as a cold turkey.
What are some of the ways that founders get to know the space industry in your experience? I would imagine working at some of these companies.
That would be a great start. In fact, in my opinion, I think working at a young space company is probably the best way. But the point I'm trying to get at is not just the technical capability. Technical capability can still be learned through books. And in fact, I have a lot of space mission engineering books and space systems engineering books. And if you are passionate enough and if you're driven enough, you can actually learn a lot of that, a lot of technical stuff through books and we are living in an information age. Like there's so many resources online. You can learn a lot of that, but developing that mindset, developing that grit to keep going when there is no sight of funding, and you are not being invited to those space happy hours, and you're just like one of those 50 space startups who have a barely functioning website, and people think that like you are wasting your prime years of your life away. It takes a certain kind of mental strength to keep going through those years. So this industry is very different. I think it takes a special kind of a person to, well, a lot of people can jump in, but it takes a special kind of person to come out through the other end.
Absolutely. With those headwinds of, being capital intensive industry, regulation heavy, process heavy industry, and with a slower timeline and a path to revenue, like absolutely grit and mindset is a huge part of it. Are there any other best practices or lessons that you've seen across space teams or businesses to help navigate some of these?
Yeah. And I mean, like good startups are able to sequence the risk that they expect. Everything is risky. Like I said, everything in space is risky. But remember how I said that the entire space industry is in the top right corner of that risk matrix chart. You got to have the ability to zoom in into that top right corner cell and see, all right, I understand everything is risky, but what within this range is less risky than others? And then you have to sort of like build your intuition. It's a mixture of both science and art, right? You got to understand the domain, but you also got to understand where the industry is heading, what could be the macro conditions that might help you or harm you in 3 years from now. So you're not aiming for the industry as it is today. You're aiming for the industry as it will be in 3 to 4 years. So it takes a bit of your prediction chops, like your ability to predict what the industry would need or what the industry would care about in 5 years from now. And let's start building for that. And along the way, they are able to sequence the risk very, very cleverly, in the sense that you gotta go for the maximum bang for buck projects or initiatives first. And in somewhere along that, you also need to account for the risk factor itself. Like, all right, this is a low buck, high bang capability, but there's also a high risk involved. So you gotta temper that understanding with a bit of risk accountancy as well.
I keep saying this, but so many amazing insights that I think folks can learn from. This concept of predicting where the industry will look like in 3 to 4 years and building for that future, I think that that is a evergreen concept regardless of what industry you're in, what kind of business you're operating. Thinking about the future and then building towards that is super imperative in today's world. The rate of change that we're experiencing globally and within humanity is unprecedented. So this prediction capability, I think, is harder today than ever. Who knows if another chat GPT will be launched in the next year and a half, and how that would change how we live, work, and play. So I think, again, visioning for the future, checking in on that vision, understanding what bets you're making along that path is an incredible lesson that anyone can walk away with today. And are there any other lessons that earthbound businesses can garner from studying their space counterparts?
One thing that I've noticed with a lot of successful space startups that have gone on to become successful space companies is that they have been able to fight against. most people who are in the space industry, they're not in it because space industry is known to make billionaires. Billionaires enter into space industry, but space industry so far has not been known to make billionaires, right? So most people, my thesis is that most people who are in this industry are so because they are passionate about the industry. At some point in their lives, perhaps during their childhood, they got bit by the space bug, and they have been trying to shake it off ever since then. But space lives in their heart, and they want to do something about it. And so they are faced with that difficult decision, right? If I don't do space, I will never be able to forgive myself. So let's do space, and we'll try to figure out, well, we'll try to take it as we go. And yet, despite all that passion, despite all that lifelong dream of doing something in space, they are able to compartmentalize their passion versus what would actually bring in revenue, what would actually make sense for the company. So that ability to compartmentalize pet projects from actually revenue earning projects and sort of like uh, kill out the weed early, like be able to tell the I've been almost every person who has had a space domain background is to some extent guilty of this. At some point in our careers, almost all of us have given more importance to certain initiatives or efforts simply because they were like closer to our hearts. You feel more passionate about this, and you're willing to overlook the numbers in the spreadsheet, because this is all a passion field. Let's not look into numbers. But at some point, that reality hits you, and hopefully it hits you before that has had a lasting damage to your company's trajectory, to your startup's trajectory. And I think in my view, that is one ability that if you are asking me what is one of the most reliable indicators of which startups will succeed versus which startups will continue to stay a startup for a very long time, is the ability to differentiate between science projects and commercially successful capabilities.
It's so important to do that. I definitely do not think that that's limited to space. I think that's true for any entrepreneur, regardless of what seat they're in today, to think about no matter how much optimism you have for an idea or a new venture, optimism alone cannot change the numbers in the spreadsheet. And I think that that's a really important lesson learned. But creative sequencing of different projects and monetization paths could eventually get you there to your mission. So I would just add on to that that if you do have a really great idea that feels maybe not financially feasible as a act 1, maybe it's an act 3, an act 4, an act 5 of your business, and what are the paths along the way to get there?
There's a reason Jeff Bezos and Elon Musk waited before they were billionaires to do what they have always wanted to do, which was space.
That's a really, really good point. And I've heard that some of the other space, maybe more quiet space startups are also founded by billionaires as well. So maybe it's a different industry, or maybe there's other monetization paths
Barrier.
within
We can
space.
argue about that, but the barrier to entry in spaces is going down. Yeah,
Yeah,
you no longer need to be a billionaire to create a successful space company. We have several examples to
I
supporting
love
that.
that. I love that. That's great news to hear. Just a follow up question on the space science projects versus what's in reality. What are a couple of ways that you've seen or tools that you've seen founders leverage to help differentiate? So, for instance, in my line of work, working in strategy, innovation, and adventure, a lot of it is user research. So maybe talking to regulators, seeing what the RFPs are coming out from the government, following those avenues could be a good start to see where the priorities at large lie. But are there any, would you agree with that, first of all? And either way, are there any other tools that business builders can leverage to help differentiate between, hey, this is just a great science project versus, hey, I think this could be a real business?
Yeah, space industry, at least in my opinion, more than any other industry, is guilty of finding problems to preconceived solutions, and those preconceived solutions often come out as a result of those same pet projects that I was talking about. Maybe it came out of somebody's PhD project. Maybe it came out of somebody's long held conviction that certain kind of technology would be helpful without actually market traction. So I think one way to sort of like remedy this situation would be to do a very uh, detailed and sort of like trustworthy market research, before you actually commit a lot of dollars to any effort. I know it's not the kind of work that space engineers want to be running to first. It's usually let's develop a satellite and we'll figure out the rest of the things later, or at least let's start doing technical work and we'll figure other things along the way. That has been the modus operandi for a long time in space industry. But I think going forward, if the industry as a whole has to mature, uh, your future customers have to be studied in advance, not when your product is ready to be sold. What happens is that the startups get addicted to non-dilutive funding, to grants, right? And they live off grants and they continue to stay a startup for 5 years, 8 years, 10 years. Whereas you see some other startups, all right, granted, they started out with, they needed some non dilutive funding in the beginning. And it's always great to have non dilutive funding. But over time, they have been able to diversify their sort of like their revenues. I mean, some people call it revenue, some people don't call it revenue. But in other words, like the money which is flowing in, they have been able to diversify those sources to not just to include not just the government sources but also commercial players. Now that ratio keeps shifting as a function of a lot of macro factors, geopolitical, regulatory, uh, and rate environment by the Fed. And so you gotta maintain that ratio within a certain healthy range for your company to actually sort of grow from a startup phase to become an actual space company, a revenue generating, post revenue generating space company. Whereas we see a lot of companies, just a lot of startups just stay stuck in the startup phase where they keep getting the grants and in order to keep supporting these ideas. Why does that happen? Because somebody has this conviction that this is the right solution. We just have to find the right problem to solve with this right solution. Um, Sometimes, you give out certain free demos or you give out certain free products initially to certain customers. You sign up for 10 customers for free. But here's what I strongly believe: if they're not paying you, they're not customers. They are just demo users, so you can call them something else. And the fact that you've signed on 10 demo users does not in any way constitute a signal that there is a market existing for that. The moment you turn on your rate card and you say this is what we want to charge, see how quickly all of those 10 demo users disappear, vanish away. And that will serve as a very, very quick signal as to whether your idea, your solution, or whatever you're building has real traction or not. Sometimes it does involve customer education, but that customer education phase cannot go on for like 10 years, right? At some point, you gotta build something for what somebody's willing to pay. This is a very common YC sort of like a mantra as well.
All right, Abby, I'm going to ask you my final question of the day because we jumped right into the market and then we talked about business building. Tell me, what is your favorite thing about space? What gets you excited about the industry?
I grew up thinking about space. I grew up loving space since I was, I don't know, since my memory goes, like I was probably like 3 or 4 when I started watching, random space things on the TV here and there, trying to make I would see some picture of like some space activity or some satellite in a newspaper, would barely understand what's going on, but somehow it seemed intriguing enough to catch my attention even as like a 4 or 5 year old boy. So my answer is very biased. I mean, I've been trying to shake it off for for almost 3 decades now. Uh, and at this point, I've come to accept the fact that for the rest of my life, whatever I'm going to be doing, it will probably be space or space adjacent at the very most. And what excites me about space is just the fact that it's the natural next step for humanity as a whole, right? Like if, there was a famous Russian scientist, Konstantin Tsiolkovsky, if I'm pronouncing the name correctly, or if I'm remembering the name correctly. He was one of the very first founding fathers of the rocketry revolution. So very early stages, space wasn't even like going to space wasn't like nobody. It was just a work of science fiction in those black and white 15 FPS movies back then. Um, and he said something like, Earth is the cradle of humanity, but humanity cannot stay in the cradle forever. I can't think of a more beautiful way to explain what space means to people who work in this industry, because at the end of the day, like I said, most people that I meet in the industry are not motivated or driven by the riches. They are driven by this deep seated feeling for space, where this is the natural next step for humanity. And in 1,000 years from now, when the historians look back at this day and age, maybe nobody will know or remember your name, but you can die with the satisfaction knowing that you played your little part in that step towards, in growing out of space for humanity. And so, yeah, space is very special for those who work in space or space industry. And yeah, you are either born with that love, or at some point you fall in love with it.
That's so inspiring. I never thought that I would be contemplating getting even, well, actually, maybe I did think at one point I'd get more into space. But after this conversation and the way that you've shared what space means to you and how it's resonated with you from a young age, I feel really inspired to get even closer to it. And so I'm so grateful to have peers and colleagues like yourself to continue to learn from as, the next frontier continues to develop for humanity. And that quote is so powerful, of humanity being in the cradle of earth, and that we can't stay there forever. I got a shiver actually when you shared that. So thank you for doing that. What an amazing conversation, Abhi. Thank you so much for sharing your insights and your inspiration around the next frontier for humanity, space. And we look forward to catching you next time.